So like I mentioned, Article 23 is not blanketly applicable to every situation. If the income is taxed in the hands of same person in two countries and the same income, right? Then elimination of double taxation, Article 23 kicks in. So let's see some example to understand this a bit more. Article 23 is not applicable if the income is taxed in the hands of two different persons. So let's say you have a foreign company, FCO1, right? It owns an Indian company and it gets certain income from this Indian company. For whatever reasons, we are not going to get that right now, okay? The same income is also taxed in the hands of another foreign company, right? It is in these cases that Article 23 does not apply. However, if the foreign company 1 would have been subject to taxes in India on this income, right? So you pay Indian tax on this income and then you have to pay foreign tax on the same income. In such a case, Article 23 would have applied. But if the income is taxed in the hands of two different persons, Article 23 does not have any applicability. Let's look at another example. Suppose there's a foreign company which on a global basis incurred a loss of $50. There's an income which has been paid in India which is amounting to $10 to this foreign company. Now, insofar as the taxation in the state of residence is concerned, the total taxable income or the loss actually for the foreign company will be $40. And therefore, there is no tax which is paid in the foreign country or the state of residence, right? Now, if in this case on $10 they have to pay 30% tax in India or $3, can the foreign company argue that there is a double taxation? Why? Because to some extent their losses have been set off to the extent of $10, right? And they've also paid $3 in India. The answer to that is no. If the taxable income is nil in the state of residence post set off of losses or even a loss situation like we are looking at here over for $40, you cannot say that there is a double taxation.